Okay, let's start the webinar. Hello everyone, welcome. It's a pleasure to be here with you on fxtrade.com stream. Nice to see you all around. And as you may know, we have been working in this beginner corner to help all starting players, the traders and not so starters, okay, to develop their technical skills. The fact is that the idea of the beginner's corner is to gather all the technical information plus the tips and tricks the forex market may have, and the idea of this webinar is to go with different technical subjects and of course continue with the last 15 minutes with any kind of technical doubts you have, and I will be here to help you. Anyway, we are going to talk a bit about trend continuation formations today. The fact is that we started with this webinar past week, but electricity left my house. Sorry. Okay, so we could not finish it past week. So we are going to start from the beginning again, and hopefully we could complete today's session. Okay. Anyway, as you may remember, a couple of weeks ago, we have talked about the trend formations, right, in the figures, the group of candles that suggest or anticipate such market movements, okay? And we have talked about the trend reversal formations. We have described the head and shoulders, the triple and double floors, roofs, inverted head and shoulders, etc. Today, we are going to talk about the trend formations that are understood as trend continuation formation, right? That is, we have a certain trend, we have a figure developing in the market, and after that, trend is supposed to continue in the previous figure trend, okay? So, starting with what we call trend continuation formations, there is the symmetrical triangle, as you may see. It's typically bullish or bearish market. And of course, it's implying a continuation trend, not a change in the existing trend, right? Usually, this kind of triangles are understood as a sideway rest inside the dominant trend, meaning the dominant trend is bullish in this particular case. We have a rest, we have some consolidation in the middle before the trend resumes and the price action continues to the upside, right? Believe it or not, this kind of symmetrical triangle tends to be quite reliable figures, right? It is highly reliable, means once the figure is complete, the break of the triangle will certainly confirm the rally, and it has high probabilities of success, despite being a very common figure. I have chosen for past Friday, anyway, I have leave it for today, this early triangle, because despite being in 1 hour chart, the fact is that it is reliable, okay? And as you may see now, when we see the figure itself in this particular example, the final target was accomplished pretty fast. The idea is that the figures or all the technical studies, right, as bigger the time frame, as higher are the possibilities of success, okay? But when it comes to triangles, I have seen that even trading in 1 hour charts, of course it's better in 4 hours or daily charts, but even in 1 hour charts, we may find that they are highly reliable figures, okay? As usually, when we are talking about a triangle, right, the first thing we need to do, right, is estimate where it should be broken to confirm the trend continuation. So, what we say is that we need to measure the length of the triangle, right, from the first point of it, right, to the vertex, right, in here. Okay, so if I measure this triangle from the first point to the vertex, I find out that it's a triangle that lasted 37 candles. Can you see the small 37 below my cross? See if I move it? Okay, 31, 30, 28, 25, 20, see? Okay, this particular one in the early chart is of around 37 candles, right? The theory says that the triangle, to be considered reliable, should be broken in between the 50 and the 75% of that distance, right? So, as we said, 37 let's say 6 candles, okay? 50% will be 18 candles, right? And 75% will be sort of 22 candles, right? So the idea is that once we have the triangle draw, the price action should break among the candles number 22 to 15 to 22, right? And if you take a look at this particular one, the break has been developed in the candle number 21. So we are among the parameters that made the break reliable, okay? Why we said that? Because if we break, okay, too early before the 50%, okay, it's not considered a triangle, and the trend will probably extend, of course, but the figure will not allow us to draw at least 2 points, right, of ascendant trend line. Okay. Since Annie is telling me, sorry, excuse me, the webinar today was about continuation patterns, and the reversal patterns formations was performed 2 weeks ago, right? Maybe FX Read has a wrong schedule. We are going to review that. My apologies if so, but in any case, the trend reversal figures webinar has been recorded, so you should find it. We will ask our moderator to take a look at it, okay? Thank you. Anyway, I was saying that if the triangle is broken after the 75%, right, the fact is that the price action won't be breaking towards higher highs, but extends on the consolidation. So that's why a break after the 75% is not considered valid, and we should discard the figure, okay? Of course, being considered a trend continuation formation, the break of the triangle should be in the previous trend direction, right? Meaning, if we have a triangle in the middle of a bullish trend, like in this particular case, we have to wait for a break to the upside, right? If it breaks or is triggering the opposite direction, meaning, I don't know, a candle breaking below this ascendant trend line that is the base of the triangle, right? Then we should discard the figure and don't use it. Of course, it's break of an ascendant trend line. So what's the difference in between breaking a trend line and breaking to downside a symmetrical triangle? Well, the difference lies in the fact that when we break a trend line to downside, we don't have exact targets, right? The price could fall 10, 100, 1,000 pips. The fact is that there is no guide to tell us where the take profit will be located. But in the case of the triangle, right, the idea is that the probable target will be equal to the height of the triangle, meaning the distance in between the first and the second level, right? In this particular case, it's 95 pips, okay? So once the price breaks the triangle to the upside, right, in this particular point, it should develop at least 95 pips. As you may see, the price has completed and achieved the target in less than 2 candles, okay? That's the general idea, meaning if you have an ascendant trend line, can you say the price will fall 95 pips? No, you don't have that particular target, right? As I told you, it can fall 10, 100, and 1,000, okay? But in this particular case, in the case of the triangles, we have a determined profit or limit or target zone measured by the height of the triangle, okay? Besides, the triangle itself will act as stop loss in several cases. It will depend on how conservative we are in our trading, right? Because if I'm following this hourly chart, okay, and I see this break to the upside with this strong candle, and I'm a bit conservative, and I wait for a new candle to open outside the triangle, right, like in this case happened, I have lost half the rally, right? I have lost to win, not lost, but has been unable to win or to profit for the first 45 pips, right? That's way too much, honestly, in this particular case, right? So if I am conservative and wait for a candle opening outside a triangle, right, my stop loss will be placed just below the broken descendant trend line, okay, just below that level. In the opposite case, if I'm not so conservative, I can take two positions. Either get into the market once price is 10 pips above, in an hourly chart, at least 10 pips above cross spread of the descendant trend line, right? In which case I will have entered into the market in the previous candle, right, around this area, and I would have been 66 pips down, right? And in that particular case, place my stop loss barely below the ascendant trend line that is the base of the triangle. Okay? Do you understand what I say? Anyway, another thing that we can do is if we are following a figure in the 1 hour chart, right, and we see a start of a break-in, we can turn to smaller time frames. Let's say 30 minutes, okay? Like in this particular case. So instead of once the price break, right, I could wait to see not just a 30-minute candle opening above the trend line, right? That will also be a good technical confirmation, pretty much conservative, and my maximum drawdown in this particular case will be of 27 pips, right? Not even that. Candle open here, 17 pips, sorry, okay? Oh, and in this particular case, seems a bit more interesting, and is what I tend to do, okay? If I'm watching the triangle in the hourly chart, I move quickly to the 30 minutes to see if I have a candle opening, okay, above the triangle. If I'm trading the 4-hour chart, then I will turn to the hourly chart, because you know that many majors tend to perform pullbacks, right? That is a retracement towards the broken level, a test, a failure to regain the downside in this particular case, and then they start to bounce back higher and extend their rally towards the target. The fact is that not every pair, not every time we are going to see pullbacks. Euro and pound against dollar tend to perform pullbacks in between the 75-82% of the time when they break a figure, right? Japanese yen crosses, on the contrary, they hardly perform pullbacks. So if I'm sitting here waiting for that pullback, right, most likely situation is that I will miss the trade, okay? So waiting for the pullback is, well, it's what the books suggest, but maybe it's not the best idea of all. Anyway, there is another option to measure the possible target of a triangle, right, by including the concept of time, okay? We must draw a parallel line, right, equal this ascendant one. So I will use a channel to do that, okay? Okay, we must draw a parallel line to this base of the triangle, right, testing this area, right, at the higher level. And in this particular case, I will wait to the price action continuation reach the top of that channel. However, as you may see, when we are working in smaller time frames, right, the target set this way is much more smaller or shorter than the one set by the height of the triangle. So the thing of drawing parallel lines, yeah, I don't know, if the rally was not so strong and in this particular case, right, if the rally was a bit more shy and not that this strong, then we could be in the market for a long, long time, okay? But it's not always such the case. So I believe that the height of the figure is better to consider, okay? Of course, the price of the movement of the movement of price, inside the triangle, is not something neat, right? On the contrary, okay, we are seeing this kind of movement, right, that are telling us not as we have seen in the box 1, 2, 3, 4, 5, 6 points of touch. But if you take a look, you will notice that usually if the movement or the trends inside the triangle develop in either 3 or 5 legs, right? One to the upside, one to the downside, another to the upside, another to the downside, and finally back to the upside. That is 5 movements. You will notice that also. Besides, another interesting tip when it comes to triangles, right, is that we draw the base, using 2 points, like in this particular case. A third point that approaches, a third low after this 2, that approaches to the basis, okay, but failure to test, it's a good signal of an upcoming break to the upside, okay? Keep that in mind when you're taking a look at triangles. 2 touches, the third fail, that's usually understood as a good signal of bullish continuation, in this particular case when the trend was bullish. Anyway, one more thing, and I will do a little interruption, so I'll let you check if you have questions, okay? As usual, I believe that the market volume is pretty important during the triangle, okay, and this kind of formation. We need to see a descendant volume, right, during the triangle formation. All inside the triangle formation, we will probably are going to see a low descendant volume. We need to see a spike or a higher volume in the moment of a break, right, like in this particular case. If a pullback takes place, okay, because not always does, right, volume should be lower, okay? And on contrary, when the price starts addressing to its target, volume should rise again. Anyway, there are different kind of triangles, right? As we said, this is the symmetrical one, right? What we know as ascendant triangle, right? With more or less same trading laws. We are going to review it quickly right now. This is the Australian dollar in the daily chart, okay? An ascendant triangle, is the one that is also typical of bullish market, okay? And of course, means a trend continuation after the break, right? And again, it's common and reliable figure, but the difference is that the price action, right, is formed by a zigzag where we can see at least 2 maximums, right? At least 2. In this particular case, we have 3, 1, 2, 3, 3 maximums at an equal level, right? That will be our resistance area, and 2 ascendant relative minimums, right? 2 ascendant relative minimums, this particular one, right? Where we draw the ascendant trend line, okay? Of course, the ideal, as I told you, is the one with 3 touches in the top, okay? And at least 2 in the bottom. If we have a third, and the third is a failure, meaning the price approaches to the trend line, but not actually touches, just approach it a bit, right? That again will be a good confirmation. You know that I told you about the volume, right? I will say it again. I said it so many times. I'm sorry if I repeat it again, but you don't need or you don't have to add a volume indicator to your chart to see where or how high the volume is. The technical indicators that measure volume that you add to your chart will only be measuring the trading volume of the certain broker you are working with. It's not measuring the volume of the full market, okay? So how we can determine if there is or there is not a strong volume in the market? Well, what I tend to do is no matter what time frame or no matter what pair am I trading, right? I consider that we have high volume in the market when the candle on the study, in this particular case, this one that is the one that broke the triangle, right? When this particular candle, right, is at least 2 or 3 times larger than the average in the particular time frame on the study, okay? And as you can see, this one is almost 3 times longer than what's average for ALSI in the daily chart, right? Again, to calculate the objective, right, we measure this distance in this particular case, 200 pips, right? And as you can see, the pair took a couple of days to accomplish that target. I will put, okay, a marking here, and I will jump to the 4-hour chart, sorry for that, right, to show you how in the 4-hour chart I've seen a candle opening above and outside a triangle, barely above, right, but above, completing a very small pullback of less than 10 pips, right, and giving me the opportunity in this particular case to grab almost all the full rally, okay? Even though I can even turn to the 1-hour chart. But what I'm seeing, if I'm following the figure in the third time frame, keep in mind to move in one time frame lower, sorry for that, again, right, to confirm the break or the pullback, candle opening outside, the pullback, whatever technical support you may find, okay, to give you the entry, okay? In this case, it's one of the most clear, okay? We have another kind of triangle, right? We are going to take a look at that right now, and that is what we call a descendant triangle, right? It's pretty similar to the ascendant one, right? The difference lies in this particular case, right? We have a base level, right? Minimum at descent level, right? And descendant maximums, like in this particular case, right? It's typical, of course, of bearish markets. We are very bearish in the dollar to descend. The trend has been bearish for over a couple of years already, right? It's again a common and reliable figure, and its usual means the rest in the middle of dominant trend, okay? The ideal descendant triangle is the one with at least 3 points at the bottom, okay, and 3 at the top, right? Being the last one a fail again, okay? As price should not reach the trend line. If it does not reach the trend line, it's even better, okay? Of course, the base in this particular case is acting as a strong support area, and as you may see, after breaking lower, right, the pair develops a rally that completes the target, measuring the height of the channel of 110 pips, right? Anyway, again, the volume behavior, remember, should be strong with a break, lower if we have a pullback, right, and increasing again when the pair starts addressing to the target. At this point, there's one thing I want to add, okay, that is beyond books. So I will make a small pause, check if you have questions or comments. Okay, no questions, no comments. So we're going to make a small pause to the books and go to the real life, okay? I have been following this triangle in the pound dollar, okay, in the daily chart early this year for quite a long time. The pair has found a static support level in the daily chart around 153.30, right? As you may see in here, okay? We are talking about ends of 2010 and early this year, okay? And at the same time, we have this descendant trend line, okay? So, in fact, despite we are talking in this particular case of a descendant triangle, right, which should be in the middle of bearish trend, and in fact, in this particular case, this formation is a descendant triangle in the middle of a bullish trend, right? So, how that goes with the book? Well, really, it does not go with the book, right? And it's not what the theory says, but in fact, the pair has managed to break to the upside, right? Complete the previous trend, right? As any other triangle, okay? And of course, accomplish the target of 970 pips, which target was the 66 area, and it was reached around here, okay? Of course, if we are talking about the daily chart, so it took 2.5 months to complete its target, right? But it has been a triangle that has been developing for over 6 months, so that's where we should focus, okay? Anyway, why, despite being a descendant triangle, I could trust in the figure? Well, I'm not only trusting in the viewer, okay? What I'm trusting in this particular case is that despite several attempts, the PS was unable to break 53.30 to the downside. It has shown us that investors' interest is around that level and that we will probably continue to see buying if the pair dips to that area. And on the contrary, after breaking the descendant trend line, right, I will trade a break of the trend line and find out if the price action will extend to the upside, right? So all these buyers that were gathered here and aiming to push the pair higher and defending the 53.30 area, right? Once the pair broke the descendant trend line, right, had convinced the rest of the market, sort of, right, of the price continuation rally. Okay, so keep that in mind. Keep that in mind that what we see on the book, okay, has not that much to do what we see in real world. Okay, it's not like because if it's a descendant triangle in the middle of a bullish trend, I cannot trust it. The fact is that almost any triangle, despite descendant, ascendant, or symmetrical, if it's in the middle of the trend, it's just that rest of the trend, and it's broken in the way of the previous trend, should signal further gains of a continuation of that previous one. Okay, don't be so tied to the theory. Okay, learn to see that. I will add one more thing to today's subject. Okay, give me a second. I will place it right now for you. And I want to show you, it's not in fact, okay, here we are. Can you see it? Okay, I choose this graphics to show you the examples and the difference in between what we call flagged, wedge, and pennant, right? These are very common figures that we are going to see in a smaller time frame. Usually for the 15 minutes, 30 minute chart, 1 hour chart, it's mostly useful for intraday traders, right? Not for long-term ones. These are figures that we are seeing in between smaller time frames, okay? And these kind of figures can appear either in a bullish and bearish market, and of course they mean a trend continuation and a lateral raise inside the existing trend. It's just that you will hardly find this kind of things in 1 hour charts or above. You will only see this kind of figures if you trade small charts, okay? They are very common, but the fact is that they are not really reliable, okay? They are not as reliable as the formations we have seen. The difference in between this and the triangles we have been seeing, right, is that we have a tiny fluctuation range, right, during a short period of time, right, where the price reaches both extremes in almost every and each single candle, right? We are not seeing a rally to the upside that may last 2 or 3 candles and a rally to the downside that may last even 10 candles in the middle of the triangle, okay? On the contrary, in this particular figure, each candle tends to touch both the roof and bottom, okay? And to calculate a possible objective for this kind of figure, what we tend to do is measure the length of the preceding latest rally, okay? Meaning in this particular case, as you can see, this one in here, okay? I measured the last previous rally, okay, and that we should be replicated to the upside and give me the target area for this particular price movement. However, this target definition is not the most reliable one, meaning what I'm telling you is what the books say, okay? But my personal experience is telling me that this target definition is not reliable, okay? But because these figures are mostly there to ratify that the dominant trend persists rather than to give me a signal to get into the market, okay? Meaning, let's say that I have bought the pair around this level, right? Or in this particular one, I have bought the pair around this level. right? And all of a sudden price starts falling, right? I'm doing this kind of figure, okay? As long as above the bottom line, right? As long as above that area, I should feel confident of my buying, right? And expect continuation of it to my previous target, which is not this one, okay? To the target I have set when I decided to buy. So this kind of figures, as I told you, in smaller time frames, are there not to give me an entry signal, right? Just to ratify the dominant trend and warn me earlier if we are going to see a break or a reversal, and I may start losing or not with this, because if they break their brace, price will probably approach back to my entry point, right? So if they break their base, well, I'm out of the market, okay? And I take my profits and go out. But if they break to the upside, I will keep my trade open till the target I have already set by the signal that let me get into the market at this level, okay? The difference, as you may see, is that the flag is pretty much like a channel, right? A channel in the inverted direction of the dominant trend, okay? And the wedge, right, are basically triangles, right? But you can see that both trend lines are sloping to downside, right? Both runs in the same direction, okay? Both trend lines tend to go in the same direction. So if the dominant trend is bullish, like in this case, both lines will be descendant, right? That is what makes a wedge. While in a bearish trend, both lines will be ascendant, okay? Usually price fluctuates inside very quickly, right? Like in all three of them, reaching almost the vertex of the wedge before recovering the trend. That's another difference with the triangles, right? Remember, we talk triangles should be broken in between the 50 and 70% of the length, right? In this particular case, we see approaches to the vertex. And the pennants are exactly the same, right? And look mostly like a symmetrical triangle, right? But also they are smaller size, small duration. The zigzag movements probably will reach both extremes in the same candle, okay? And will usually break near the vertex or near the end, okay? That's the difference with the previous figures, okay?